Hey, what's going on? It's Jeremy back with another weekly bias video. Today is actually Saturday, July the 20th. I'm actually on the 15 minute right now. So, give you guys a quick recap from this past week. Try not to keep you too long. So, I've got a couple annotations on the chart. So, essentially, last week, um, we had this run above external range liquidity. We were looking for a draw internally. I was looking for, I believe it might have been this liquidity low. So the same candle from 2 weeks ago, where we took the external range. I was looking for the internal range. We actually ended up clearing one, two, three. So we ended up clearing liquidity from 3 weeks ago, which had also tapped into a previous fair value gap. So um, so 19,726. We swept that liquidity out, and again, that was 3 weeks ago. So candle low this week was 19,654. I believe I did in the weekly bias video last week. I suggested that maybe we would dip into the 19s. I think initially I said 20 something, but we did actually dip into the 19s. We're kind of still in the 19s, so price closed at 19,713. So quick, long, and short. I'm going to take those annotations off. So at the outset, like my idea or my bias would actually be, so market opening tomorrow and into Monday. I would initially be looking for probably a a very intermediate continuation short, only to take that liquidity, because I would actually be looking to see if we get a little bit of displacement back long. Not so much for continuation, beyond this previous week's high, just in order to what I would refer to as, you know, to shake some people out, to give them the indication that the market is dropped as far as it's going to go. It'll stabilize, it'll consolidate, and then we get basically a manipulation and a move back long. I am of the mindset that yes, there's going to be a manipulation. Yes, there's going to be a move back long, but it's not going to be a longer term move. It's a move potentially to set up continued shorts. So here's what I mean by that. I'm going to just show you these annotations again really quick. I talked about this close back inside will take out recent swing low. So that just in a nutshell. And when I go down to the 15 minute, I'll show you what that looks like. So when I drew that out, if memory serves me correct, I drew it out based on the the week. This candle is the week of the 10th of June. Yeah. So this is the week of June the 10th. So the 10th through the 17th. That structured delivery cleared a high, and then once it cleared, it came down and it basically made a low, but then it made another low before it pushed back long. So it's set up basically. I was saying close back inside, take the recent swing low out. That was kind of my mindset to say, okay, I'm looking for a dealing. I'm looking for a weekly dealing range, right? So just to put that in perspective for you, so you kind of understand like what the hell is he even talking about dealing range. If let's say you can pick any one of these weekly candles. It doesn't matter. You can pick any one of them, and typically, not to really take your attention and your focus away from whatever your strategy is, but there's a concept of inside candles. It doesn't matter. It's fractal. It doesn't matter what it is. I would just tell you, you can type in something like inside candle strategy, or you could type in inside candle liquidity, however you want to phrase it. And what you'll come on, and I'll say this briefly, that it doesn't matter. Again, the time frame, it doesn't matter because it is fractal. In most situations, it is not always immediate. I'm going to say that again. In most situations, but it is not always immediate. Whenever you have a high and a low of a candle. It could be a monthly, weekly, daily, 4 hour, 5 minute, 5 second. It doesn't matter, right? At some point, there's going to be liquidity that is obviously going to be sell side buy side within that structured candle. At some point, the sell side liquidity and the buy side liquidity for that candle are going to be swept out. So that's not like a big aha moment. I'm not going to say everybody knows that, because there was a long time, there were like a couple of years I didn't know that, because nobody ever just came on YouTube or anything and said it. Now ICT probably said it. There were probably a few mentors that have just provided knowledge and just have just said, point blank, hey, this is what happens, not in a situation, but these are the things that happen, period. I didn't hear that for a while. But if you look here, we have this candle on what is that, 17th. So the 17th, what do you have here? You've got the sell side liquidity swept out. The following week, the first week of June, the buy side is swept out. This candle that swept out here, so you had, I'm sorry, nose is itching. So the weekly candle for the 24th, June 24th, what did you have? You had the buy side that was taken. This week, you had the sell side taken. So just to bring that back to what I was talking about, when I said close back inside will take recent swing low out, I was trying to determine, okay, if you're going to take this out, I'm looking for what the dealing range low, the weekly dealing range low would be. And in this specific instance back here, it produced relative equal lows. So the week wasn't quite over. So I was looking to see, that's why I annotated this, and it's still on my chart. This is from June. We're obviously, halfway, 3/4 of the way through July. It's still on my chart. Why? Because I'm waiting to see if it closes back inside. So I set this up. If you notice, that's a wick. That's a wick. This one never got there. And this is the first week that I got to close back inside for that candle. Why is that important for me? I've been looking to sell NQ. As you could tell from all these indications back here, I got all these magnets saying, at some point you should come here. At some point you should come here. At some point you should come here. But not extremely overzealous, but saying, okay, there's a reason to come here, but maybe it's not time. Okay? So I'm long-term bearish under the right circumstances and conditions. But once we got up here and I said, okay, once I realized, looking at this, okay, you're not coming, you're running away. Okay. I'm not going to completely abandon that idea, but I'm going to keep it as a reference to say, okay, if and when we get close to this area, this is kind of what we might be looking for based on price and structural delivery. So I finally got smart when I got here and I said, okay, close back inside, take the recent swing low out. You could potentially be looking at a market structure shift and then a continuation short. This might be an indicator. Within that same kind of context, I was also looking for a 2022 model to demonstrate not the continued shorts, but to show that there might be the engineering of liquidity long to then sweep out or take out a low, which, again, as I said, we just got here in a weekly candle. So all of that to say, I'm looking for a short-term low at the open, sweep out some sell-side liquidity, run back long, and then continue short. So these two, you can't really see that. And I got that locked, so I won't. Okay, so this annotation here, this horizontal ray and this horizontal ray, so this is obviously a low that's been set. This was a high, and I will show, no, don't do that. I will show you, and well, let's stop at the 4 hour so you can see. So the 4 hour looks like this, okay? And you could say, why that's not really a high. You're right, it's not a high, but that's the range, okay? So this candle closed here. It opened, it rejected, it pushed, it pulled back, and it closed here. So what I'm looking for is when price opens Sunday, and whenever it does, it's piddling around. What am I expecting? I'm not expecting it to run into this fair value gap right away. I'm expecting possibly, and what do I know? I don't know shit. Market doesn't move to me. We and I move to it. I would be looking to see if it just goes on ahead and takes this low out, and then it moves back into this fair value gap come Monday, and it kind of, messes around in here for a little bit, and then it pushes long just to find whatever inefficiencies that may exist. So if we pull this back, we had again this precipitous drop off, which, you know, you've got a, let me move this over. Can I locked that? You locked it. I'm just gonna slide this like that. Why is it important? I'm gonna show you. That's a low. That's a swing low. That's a high. So this is a low, that's a high, and this is a sweep out of that. This was my relative equal low that got taken here. These two are relative equal lows. That's a bearish. This is a bullish. So those are relative equal lows. Well, what happened? They both got taken out here. So this is 3 weeks. It's a 3 week old previous dealing range low taken, right? What am I now looking for? I'm looking not for a long-term bullish move. I'm looking for an intermediate kind of move long to accumulate again, manipulate, and distribute short again. So in very short layman terms again, what am I looking for potentially this upcoming week? I'm looking for a clear of this recent sweep only to move price long. Now, how long are we talking, Jeremy? What are you saying? I don't expect for it to get back above this high that just got set on Thursday. I believe it was Thursday, right? Yeah. So I don't expect for it to get back above the high on Thursday. I do anticipate maybe with this body closure, and this is where it becomes subjective. For some people, it would be subjective. Um, for me, I would look at this, and that doesn't line up right with anything. So the very next thing would be for me to say, okay, don't take that. Maybe, yeah, no. And what I'm talking about is this is a closure in my mind. It doesn't take out this wick low. So this body closure, this bearish body, doesn't close below this wick. I could say this one does. So it depends on what your methodology is. My methodology is if I've got, I would be looking at the last fair value gap, the furthest fair value gap away. If I'm looking at just structure, this would be the candle. This would be the bearish candle that I would kind of hedge on. Why? Because this is the bearish candle that, in my mind, broke this structure. That's me. Somebody else would say, "Well, you just said the furthest fair value." Yeah, I did, which ultimately would be this one. Like that's an obvious one. This one here, um, no. This I would look at this as not really significant in the overall delivery of price. It will at some point, but I don't see it as being that right now. Again, personal opinion. This candle here, the body closure is within the wick of this candle. This bearish candle opens within and closes below. So this would be the fair value gap that I would look at. My stop would go above here, right? And I know this is a 4 hour, and you could be like, damn, that's a 4 hour. But this would be my 4 hour point of interest, which means what? If this is my 4 hour point of interest, I need to see where price opens and what it does. Now, if we get something like, let's see if I can, I need to remember where the thingies are. Path. There we go. So if price opens something like this, let me see if I can superimpose that on this down here. Oop. That's too big. I'm trying to do my John Madden. All right? Trying to do my John Madden. If we get this, bang. You get that, boom. I'm probably gonna end up shooting this video again. All right. So price opens. And it does something like this. I'm willing to concede that I'm not gonna be waiting from here for it to run here. Why? Because as long as we get some accumulation that occurs, I don't want to see it run right away. I think Sunday and into Asia and probably even into London, I think there's going to be a lot of consolidation. I'm going to be waiting for manipulation to sweep out the low. And then if it comes back in and it piddles around for a little bit and then takes out the high, what am I waiting for? I'd be waiting to see it come literally right back in here and do it again. And the reason that I would be waiting for it to do it again is because, quite simply, I I, I believe there's a shakeout. Because for the people that would have been able to anticipate the manipulation from Wednesday, I think it was a Wednesday. I'm gonna be very transparent with you. I didn't see it. I had been at work that day. By the time I was looking at it, I wasn't looking at. I was looking at price and I was looking at the immediate structural delivery. I was not looking at, hey, what happened during the PM session into New York close, into Asia. What's the Asian rate? I didn't look at that. I looked at, huh, what would price do at six? Like, I'm telling you honestly, I said, well, what did price do at 6 p.m. for NQ futures? Reopen. So 6:05. Where was price? Okay. What was the last high and low before 7:45 or just before 8 p.m.? Okay. What's that high? What's that low? Okay. I didn't take into totality like, hey, where was price from 1:30 to 4, and then from 4, obviously the market is going to close, like futures is going to close for basically like those, I don't want to say 2 hours, but almost until 6 and 6:05, and then where's it going to reopen at 6:05? I didn't look at that and then say, okay, let's add Asia to it. What does that look like? I didn't do that. I looked at a specific metric for a power of 3 to occur pre-Asia and then a manipulation within Asia to be able to, look for a mechanical entry to get in and potentially get out. So we did find one of those on Wednesday. However, I'm not saying that, hey, had we been paying or had I been paying attention, we could have found something significantly better if we'd just, been able to examine the structure. Like, I wouldn't have gone to bed. I would have just said, hey, let's wait and see. So for everybody that doesn't know like what I'm talking about, hopefully I'm gonna get rid of this, but that's my thought on that. I'll show you what I'm talking about because you're like, what the hell is this dude babbling about? So Wednesday. Okay. Do do do. Went here. Okay. This is what I'm talking about. That's what I'm talking about. So you have Wednesday. And this is, again, some people would say it's subjective. It just depends on your methodology. It depends on where you learned, who you learned from, what your philosophy is, what your trading style is, all of that. So here we have basically New York lunch, right? Some people trade it, some people don't. I've done it successfully a couple times, and then I pretty much flipped over my sands of time, meaning I was successful doing it a couple of times, and then I stopped. I didn't push my luck because, you know, deep somewhere in my soul, something said this is not smart to do long term, like unless you just like really know what you're doing. And I was honest enough with myself to say, yeah, you got an idea, but you don't really know what you're doing. So this basically is going to be the 12 o'clock, right? So this is my 1 p.m. candle, and I would say, okay, so from 1, where is my 4? That's this is 3:45, so this is 4 o'clock. So I would mark this out and say, okay, that's my low. This would be my range low, and then this candle here is 130. That's my range. Okay, this would be my range high, my range low. I'm gonna just use a horizontal line for this. And yes, it's getting ready to pour down outside. I came back in the house like, I don't know, maybe an hour or so ago. Hot as Hades outside, like sun beaming, ridiculously hot. And yeah, weather changed like just that quick. Okay, so all right, so there we go. So I can take I can take those off now because I know what those are and we don't have to worry about that. Okay, just to clean this up a little bit and I can get rid of that too. All right. So this is Wednesday. So you could say, okay, well, what is the significance? Like, what's the important? What are you getting at? What are you showing us? What I'm showing you is the fact that price had already expanded lower, right? Previously in a week. And there's not really a whole lot else that's going on up here. It's basically, dropped off, it's run, right? So now what you're looking at is the consolidation phase where not a whole lot's going on Wednesday, and then there's news Thursday. So if you stay with me for a second, there's something, and like I said, I just challenge you just to go back and look at price. It doesn't necessarily have to be this past week. Again, everything people that say, well, hindsight's 2020, and you would know. What I'm telling you is, yeah, this is hindsight, but I didn't take the trade. I wasn't in the position. I did record a video and streamed Wednesday night, and the move I caught was so freaking minuscule. It was in here. It was in this. And I almost want to tell you it wasn't the 130 move. It was like literally I think going on like 10 o'clock. It was small. It was very small. So the point is this was a range of accumulation. Once price popped the hell out of here, once it showed you, okay, this range is broken. This was at 2. So this is basically pre-London. Pre-London really is like 1:30 a.m. But price pops out. It shows you here, hey, this is your manipulation. Why is it a manipulation? This is your whole PM session here. That's your whole previous day PM session. I don't want to be the one to tell you how you should look, but if the PM session gives me a range and then Asia takes like half or a quarter of that range and it's concise, a lot of people say, well, the next day is going to be shitty. Well, that might be. However, just be aware of a manipulation, one, and two, if you get it one day, you might get it the next day after another run. But the reason that this becomes important is, like I said, earlier in the week, we had the dump from Monday and Tuesday. Wednesday consolidated, but Wednesday gave you this range. The PM session gave you the range. If you just want to be someone that looks at, well, what about the opening? There's a concept. I don't know who has a good video on it. I would love to be able to give you like a YouTube reference. But there is a concept called the initial balance. And I will just talk about it very briefly here, but I will challenge you, go look it up for yourself, and understand it in whatever context that allows you like a full understanding of what this is. But essentially, the nuts and the bolts for initial balances, this is basically the price movement, the price swings within the first hour of the open, which would be from 9:30 a.m. New York time to 10:30 a.m. New York time. And what you can do, and I will show you here, I can even do it on a 15-minute chart, is you can incorporate these two things. So you could look at the PM range. You can always look at this, and I would tell you just to study it. I've said this in other videos too. Just go study price action. If you're off a day, don't worry about a paper trade or anything like that. Just watch price. It sounds boring as shit, but if this is something that you enjoy, you like doing, you want to do, you want to be able to profit and benefit from, spend a day, a week, or whatever it is. Just watch how price delivers. If you incorporate this, sometimes you'll see where you can go, oh, that's interesting. So let's see. That's a 10:30. That's a 10. Whoop. Sorry. So sorry. 10 to 9 p.m. All right, so this is 9:30. That's a 9:30. Which one? That's 9. Okay, so I come here. 9:30. That's a 10:30. Okay. I'm going to clean this up. 9:30. 10:30. Okay. So this, I'm going to just change that color so you can see. Okay. Perfect. So for Wednesday, this is your initial balance. Okay? Again, just to give you a little bit more insight, the initial balance again is that price delivery, that price fluctuation between 9:30 a.m. to 10:30 a.m. What you can do is you can do what I've done here. You can just basically put yourself a area of significance or a box of importance around that time frame. Okay? What you're looking for, and again, this is like everything else. It's not 100%. It's a little bit, sometimes a little bit higher probability, but it will give you an indication of the direction under which the market is either trending, getting ready to trend, getting ready to reverse, or to move in. Okay? So what you're doing is Once you build that out to say, okay, 9:30 to 10:30, let me put this back at 10:30 real quick. Okay? So, this is the initial range. Let me expand this so you could see. Let me lock the chart real quick and open this up. All right. And move this over so you can see. Should I change? Can you see that? Let me change the color. I'm going to make it like a dark purple or something so you could actually, or blue. All right. That's a lot better. Okay. So, this would be your initial range or initial balance, right? All you're looking for is to see, okay, where's it popping out? What is it violating, or what is it showing me? So I like to use the term, okay, what's it showing me? Where are you wanting to go? Okay. Well, at 11:30 it closes below. Now, 11:30, remember what I just said about noon? Noon is the lunch hour. We don't trade the lunch hour. But interestingly enough, 11:30 it says, "Hey, I might want to go short." I don't want to use somebody else's term, but I mean, I'm from New York, so I can use it, and it's not me taking his language. I'm not taking any of his thunder. But 11:30, basically, Price said, "Hey, based on the initial balance, I want to go downtown. I don't necessarily want to go shopping, but I want to go downtown and I'm going to window shop. I want to go downtown and I want to window shop." So lo and behold, 11:45, it says, I think I'm going to shop for the afternoon. I'm going to window shop all afternoon. But it's already set the initial balance. So again, I will start out before I go any further and say, yes, you can call this hindsight. Yes, this already happened, but try out an initial balance concept for this week coming up, and see whether or not you benefit from it, you learn something from it. You, like I said, go watch other videos, do some self study on it, test it, back test it on on price action on any other chart, practice it on ES or any other asset, and see if it can be replicated or not. So you can always take that. You can always look at PM, even AM sessions for that matter, but primarily PM sessions. PM sessions for range, AM session for initial balance. But again, play with it however you want. So it literally gets into an area where you consolidate for the afternoon, nothing really happens, and then you go into electronic trade hours or, non regular trade hours. And what do you have? Um, it's accumulation or consolidation, whatever your terminology is going to be. But now I'm going to expand this out because you've already seen what the initial balance is shown from the 9:30 open to 10:30. It's already given you at 11:30. Hey, I might give you the propensity out. Like I might want to go short. We're going downtown, the window shop. So now we expand this all the way out after I unlock my chart here. You expand that out. Lock my chart back. And if you're only looking at, let's say, the range, you go into Asia and you do what I did and you look at something like a power of three or what have you. And even if you're not necessarily looking at a power of three, if all you're looking at is this was my PM range in your trading electronic trade hours, when you see this move, you're not necessarily thinking, oh, it's breaking out, it's going long. Why are you not thinking that? Because this is still a part of the previous day initial balance. So it could be interpreted when you see this no different than the people that are support and resistance traders that look for breakout trades. The concept, you could argue, behind initial balances, it sets the initial balance, and whatever direction it shows you beyond that initial range is showing you that it wants to break out to that side. So like break and retest traders. So you could kind of look at it that way if you wanted to. It just depends. I'm just giving you one idea, one concept behind how you could utilize initial balance and how you could use it as a potential confluence into whatever your mechanical or whatever your trading strategy is. So it's just something else to kind of give you maybe a little bit more confidence in taking a position. To say, hey, look, I think, it's more probable for it to do this. It's ranged. Now, this isn't really, it could be a combination of a couple of things. You could say, okay, well, it moved back into the previous day initial balance, or you could look at it from a very technical standpoint and say, price was stuck in this range all PM, all Asia. Now here's my manipulation. Look at it as a manipulation. Look at it as moving back into an initial balance. But you can also say, okay, well, if it moved back in here, what do I need? What else do I need to see? Well, you need to see a break of structure. You do have a manipulation here, and this is tight. Like, I don't know unless you're putting your stop above this, what would be consummate encroachment, which, ironically enough, um, I'm not gonna go back there. I'll just say you could put a stop above here and say, hey, that looks like this is a manipulation from the afternoon and Asia session. I'm gonna hedge my position short. You could do that, or what you could also do is say, hey, wait a minute, I'm sliding this over so you can see this part of it clearly. After you get this manipulation, you can wait and see if it shows you that it actually wants to go short, which, somebody would argue, well, it showed you here, didn't it? Not really, because if I had to look in here and say, where's the low? I'm trying to increase this so you could see it, so it's not as difficult and as hard to see. Yeah, that's good. Okay, so if I had to look in here and say, okay, here's a manipulation out of this range. That's a manipulation out of the range, right? What low did it take out? Well, in my opinion, it didn't take any low out. Up to this bearish candle, it did not take a low out. But what it did do is create relative equal lows here. Did this sweep out those relative equal lows? You could argue, yeah, it did. It took that liquidity, and what did it do? It basically created an interterm liquidity creation to then do what? To then take out this low. So in my mind, looking at this, and again, hindsight being whatever the hell you want it to be, you could have been a seller up here, just based on the initial balance, the manipulation out of a consolidation or out of an accumulation, and you could have just gathered your position here, put your stop above, consummate encroachment of that initial balance, and you could have walked away and said, hey, look, this is where I'm at, this is what I'm doing, I'm done. Also, look at the time that this occurred. It occurred at 2:45, so this is London. I didn't know this, I didn't learn it, I didn't hear it, nobody talked about it, it was not discussed until, honestly, I would say maybe about 6 or 7 months ago. I started hearing it as or started hearing London session being described as the manipulation session. Now, again, that's why I said I'm 5 years deep in, and that's something like 7 months ago I actually heard described that way. But that's why I said note the time. It's 2:45. We're 15 minutes before the actual London session begins, and you've got a manipulation here. So again, if you have the backing of something like, hey, what was the previous day's opening balance? Was it respected? Meaning, did it show you that it wanted to go in a direction, and did it maintain that, or did it show you it wanted to go in this direction and immediately come back through and violate the other side? That's where you talk about an initial balance being violated. When that happens, you scrap the notion of a directional bias for the day, because at that point you don't know, and then you're going to need other confirmation. You'll need a little bit more of price action to show you. You might have to look at, like a weekly, like say we're on a 15-minute. You'd have to look at the weekly to kind of determine, okay, is there a shift or something that's occurring that's not allowing an initial balance to maintain its value set or to show me potentially a directional bias or delivery point. So that's again, maybe I'll do another video on initial balance. That might be something. Let me know if you guys are interested in that. Because like I said, that helped me just on a directional bias standpoint. It helped a lot. So, but back to this idea, right? Back to the idea. So again, what low did it take out? In my mind, did it take that out? No. This bearish candle created relative equal lows. The very next candle, however, just said, hey, look, I'm going to grab this liquidity. I'm going to take that, but I'm not really going to go anywhere. I'm going to create interterm liquidity. I always refer to it as interterm. Interterm to me means you're going to sweep out highs and lows in a very concise price delivery to where you can run one side or run another or manipulate within a manipulation. That's what happens here. So this relative equal lows, they get swept, right? Then you come up in here and what happens? This bullish candle forms, you get a wick above, you get a body closure below, the next candle opens, you get a wick sweep below this candle, right? It closes here, this one opens, you've got a liquidity sweep here. So that's why I refer to it as interterm liquidity. Some people call it other things. You can look at it and see all it is, it's creating liquidity because at the end of the day, once this low gets put in and it moves away, you now have something else. You now have another low that is back within this range, okay? But the manipulation has already taken place here. So now you have a clear and defined what? High and low. That high, this is now your clearly defined low since these were relative equal and that got taken out. So what does that mean? You'd need one of these two to get taken out. This one quite nearly does, but those are relative equal highs. This closes just inside of that, barely inside of it. However, this low gets swept with a body closure. So this really is your confirmation that says price is more than likely to run short. So this really is the confirmation. Again, hindsight being what it is fine. That doesn't mean now you're going to come all the way back up here and look, but I'm going to show you something. You have a fair value gap here. So you do have this manipulation, okay? You've got the manipulation, and then you also have these 3 down closed candles. So these 3 down will give you this. It's not going to cooperate. I need to clean my mouse. It starts to drag. But basically, you'll get an idea where you can draw out and say, okay, these 3 down, but that is going to be sweep. So price should not get back above this. There's no guarantee. You could get wicked out and then price run, but you get these 3 down. You could say after the manipulation takes out that accumulation, you get the manipulation up, 3 consecutive down, and you get a fair value gap in here. So they don't get tapped back into until this interterm liquidity runs back in here, and just eyeballing that looks like that's on or about the consummate encroachment of that fair value gap. So you could have, again, initial balance manipulation. You could have just said, hey, look, I'm gonna push my luck and I'm just gonna jump in here. Either way, you would have been okay, right? Again, hindsight, you would have been okay. But point I'm making to you is I didn't see this because I was stuck in here. And I can admit that. With everything else I know, because I'm not sitting at the chart in the morning, so I wasn't marking out my initial balance. By the time I got in and got back to the chart because I was available that day, is all I can say. I wasn't looking at the PM. I was focused solely on Asia. I was focused solely on that power of three window. Now, again, hindsight from the chart, but then my own personal hindsight would say if I was really just diligent, I would have said, hey, what did the PM session do? What was the initial balance? Who knows? This is one of those, who knows what would have happened? Could I have caught this? Yeah, maybe. But I took my little raggedy, what, two trades, three trades. I was done. I moved on to something else. I think I ended up getting back in my cockpit and doing some racing. Like it wasn't that important. And I show these things to you because when you do have time and you could just sit and just watch delivery, those are the things that you want to, kind of take advantage of. Because there were a few opportunities like this one just before. And if you look at the delivery here, like this is Thursday morning. This is the Thursday morning open. And fucking beautiful. Like, again, this is Wednesday PM high. This is Wednesday PM low. This is your opening candle. Thursday morning. What's it do? Runs right back through that PM session high. It comes back, it retests. And ironically enough, 10:30, it's a 10:30 candle. So let's do this one more time. Initial balance. I'm just looking at this now with you. So um gotta stop it there. That's Thursday 9:30. So let me move this over cuz I'm okay, so this is the initial balance for Wednesday, right? I haven't gone into the overall price action on Thursday, so I know this video is gonna be long as shit, but um, hopefully you're getting some value or you're enjoying it because this is the kind of analysis and the kind of things that I'm not saying people don't do on YouTube. There's a certain individual that teaches at length, you know, this way or similar. I wouldn't necessarily call myself a teacher, but we're just doing this together. So it's 9:30. That's 10:30. Okay. So I'm going to expand this out real quick. That's Friday. Friday. 2:45 Friday. I'm sorry. I'm humoring myself a little bit here. I'm trying to figure out if I want to go. Yeah, we can go to 3. I'll just go to 3. Okay. So here's something that's notable. Okay. And I'm gonna lock this real quick. So this is 2 consecutive days, and I'm gonna say it again. I did not. I just marked out initial balance on these charts. You saw the charts when I pulled them up last week. They didn't have fucking initial balance on them. Nothing even remotely close. So I wasn't using this. I was not available. So, all right. And I haven't done previous analysis on a 15 minute for Thursday. Then I was at work. So Thursday opens right after this manipulation that takes place back here. So technically, it's still in the manipulation range. It's shown that it's gonna break. It's showing that it should just continue to run short, right, from the previous day. So 9:30 opens. It rallies back up. It revisits that previous day PM high. It then runs short. And if all you were targeting, which is plausible, this is a 15-minute chart, you could have dropped down to a 1 minute and found something in here. You could have. But you could have just targeted basically previous day PM range low. Just an idea, okay? Again, I'm tossing, I'm lobbing, trying to lob some softballs out there. You can just target the low. Um, I'm scared to even look at how many handles that would have been. I really am, because that kind of hindsight makes you go, hmm. But that hindsight should also allow you to kind of take a different type of an approach and a different type of look at market structure and price delivery, because even looking here, this was your 9:30 candle, but there's nothing that says you can't use the 9:15 and the 9:45 candle, which, oh my goodness gracious, what does that do? You got a fair value gap sitting there right after the open. So, somebody that was some level of astute would have said, hey, if this candle, like, honestly, you're like, hey, if this candle closes, if it closes here, I might just say fuck it, excuse my language, and I'm just gonna put my stop up here. I'm gonna enter, and I'm just gonna target this low. They would have been in and out of a damn trade by 10:30, probably before 10:30. They would have spent an hour and been done. That is also technically silver bullet territory. 10 a.m. to 11 a.m. So you essentially would have had that opportunity, but it would have occurred. Yeah, you would have gotten it early. Let's just say that. But we'll just go back to the initial balance for the moment. Okay, for the moment. Same way Wednesday created, right? So there's your 9:30. This is technically your 10:30. So Wednesday it was 11:30. Thursday it's 11. It shows you, hey, want to go short. So now let's look at the range here. That's Thursday 12. This is 2. It's 3. So, okay. So that's 4. So the range Thursday, that's your PM range high. This would be your PM range low. So I don't even have to draw anything else up here. Why? Because price essentially just hung out up here. It hung out. But what's interesting is it didn't take it long to manipulate, but it did manipulate again to show its hand. Friday was just a little more violent in terms of the delivery, and I say violent because it was drastic, it was quick, and it was very drastic. So I'm trying to see if it is to the pip, if that is taken out. It looks like it's literally just it swept and it just ran. That's what it looks like. It looks like it just swept and went. It didn't really give you another opportunity. This candle, however, came back up. This is your 9:30 a.m. on Friday. Did the same thing that happened basically on Thursday. It did the same thing. But this was your 9:30 candle that came back up, popped back in, did not clear the previous manipulation high, and ran. It gave you a delivery. Um, so this was 9:30. Yeah, 9:30 didn't give you a fair value gap to trade into. However, you did get a fair value gap during silver bullet hour, because that's your 10, that's your 10:15, that's your 10:30. That gave you the entry here. So you did have a silver bullet opportunity here as well to target on Friday. So you had one, basically you had a modified one Wednesday, you had one Thursday, clear cut, and you had one clear cut Friday that if you trade ICT silver bullet, you had those opportunities. But yeah, that's just interesting. Like I said, I wouldn't have been able to take advantage of it anyway. I was, you know, I was sitting in a cubicle typing. I was. Stop the cap. No, I was. Seriously. Seriously. Um but yeah. So that's just that is, man, that is interesting as hell. Yeah, you have relative equal lows here. So even when price moved back, you could have simply said, "Hey, look, I'm not going to push my luck. I don't know where this is running to." And you literally could have just targeted this low. So, yeah. So what am I looking for this week? You're like, "Okay, that's great. So what are you looking for this week again?" Um Again, I'm actually looking to see if we get a move back long. I know, kind of interesting, right? Several consecutive weeks. But I will say it again. I'll go back and I'll just recap very quickly. This is a clear cut high. It's a clear high. This is a clear low. However, you could argue, and you would be correct, this is also a clear low with this clear high. That's on a 15-minute. Let's go to the 4 hour again, and then you'll understand why. This is a clear low on a 4 hour. I don't really have a clear high. So I would have to modify and toggle back and forth to justify what I would see as a high and a low, right? So on a 4 hour time frame, yeah, could it be argued that's this is a low? Yeah, it could be. And then if I move this out of the way here to say, okay, well, if you say that, then what are you saying here? I could invariably say this is a high here and this is my low. Could I say that? Yeah, I could say that. Would that be true? Yeah, it would be. That's I mean, it's a clear high. Let me zoom in so you can see it. So, the fact that I use this level, it doesn't really invalidate anything. It kind of lets me know, okay, there are a couple of scenarios and it kind of supports the idea. It supports it a little bit. I'm not saying that, yeah, it's, I see it, I said it, and that's what it's going to be. Again, interterm liquidity, a sweep of the sell side, a move back in, a sweep of this buy side, a move back in, and then delivery long. So this fair value gap might not be the very last bastion of price. It may very well reach back up and take out this high. It could. Do I know that definitively? I don't. But as an interterm target, yeah, I would use that because there's no need to be greedy. Two, um, the way that I'm trading my eval with a limited chart time is beneficial, honestly, because one, I'm not having to worry about over trading. Two, I can take a little bit more of a higher probability setup when I'm available. And also, it's going to sound weird, but even when I'm not able to take the position, it's going to force patience. It'll force it. So, less availability, which, some would say, isn't that counterintuitive? It's really not. Less availability means you're going to have to be more refined and more precise in terms of the pickiness of what position you're going to put on, and also just having to be satisfied with that position because you've been concise and picky about it. So hope that helps. This is a pretty long video today, but again, I hope you got some education and enjoyment out of it. Leave me a comment below if you've learned or you got anything out of it. Comments, questions, like and subscribe. Give me some ideas about some different videos that you want to see, and we'll work on it together. All right. So you guys, happy trading. Be safe. Take care, and I'll see you next week and definitely next weekend. All right. Take care.